Hey everyone, welcome back to Corporate Decoder, the place where we read the confusing stuff so you don't have to. And today we're diving into J.Jill's latest filing to see if their latest news is a fashion statement or a fashion faux pas. Alright, so J.Jill has just dropped a current report form 8K, which basically means they have some important news that they need to tell everyone right away. Think of it like a company's urgent social media post, but for the stock market. This filing is for J.Jill Inc., a company that sells women's apparel and accessories. You might know them as that brand with the stylish, comfortable clothes. They are listed on the New York Stock Exchange under the ticker symbol JILL. Now, usually these 8K reports can cover all sorts of things like major business deals or changes in management, but this one is pretty straightforward, focusing on one specific event. The main event here is that on August 27, 2025, the big bosses at J.Jill, the board of directors, decided to give a little something back to the shareholders. They declared a quarterly cash dividend. They're giving out 8 cents for every single share of J.Jill common stock that people own. Now, 8 cents might not sound like a lot, but if you own a lot of shares, that adds up. It's like getting a small bonus just for being an investor. This dividend is going to be paid out on October 1st, but you only get it if you own the stock before September 17th. This date is important because it determines who gets to receive this treat. It's like showing up to the party before the cake is cut. They've also included a press release that gives more details about this dividend. Companies often do this to make sure everyone gets the same information and to highlight good news. Then the final part of this report lists the exhibits filed with it. The most important one for us is that press release we just mentioned. They also included this thing called a cover page interactive data file. This is basically a digital version of the report that computers can read easily. It helps with transparency and making sure all the important data is captured accurately. Signing off on this report is Mark Webb, who is the Executive Vice President, Chief Financial and Operating Officer. This title tells us he's a pretty high-level guy in the company responsible for making sure the money and the day-to-day operations run smoothly. So what does this all mean for J.Jill? Well, declaring a dividend is generally a positive sign. It suggests that the company is doing well enough to share some of its profits with its investors. It shows confidence from the management team that they believe in the company's future and its ability to keep generating cash. Companies usually only pay dividends when they have a stable income stream and don't need all their cash to reinvest back into the business for growth or to pay off debt. Think about it this way. If you were running a successful lemonade stand, you'd wait until you had plenty of cash in your pocket after buying more lemons and sugar and paying for your stand before you'd start giving some of that profit back to your parents who initially helped you set it up. J.Jill is acting like that successful lemonade stand owner here. This 8-cent dividend per share isn't a massive payout, but it's consistent. J.Jill has been focused on improving its financial performance, and this dividend aligns with that strategy. It's a way to reward shareholders for their investment, and it can also make the stock more attractive to investors who are looking for regular income from their stock holdings. However, we should always remember that a single dividend announcement doesn't tell the whole story. To get a true picture of J.Jill's health, we'd need to look at their more comprehensive financial reports like their quarterly 10Q or their annual 10K filings. Those reports would show us their revenue, their profits, their debt levels, and how their sales are really performing compared to their competitors. For example, we'd want to see if their sales are growing year over year, if they are managing their costs effectively, and if they have a healthy amount of cash on hand. For J.Jill, this dividend is a move towards becoming a more shareholder-friendly company. It signals stability and profitability. It's a good sign, but it's just one piece of the puzzle for any investor looking to understand where the company is headed. We'll be keeping an eye on their future reports to see if this trend of returning cash to shareholders continues, and if the company's overall business growth supports these payouts. What's your take on J.Jill's latest dividend? Does it make you more interested in the stock? Let me know in the comments below. Your thoughts and theories are really valuable. If you found this breakdown helpful, please give this video a thumbs up. That really shows your support. And if you want more of these quick and easy explanations of complex financial documents, make sure you hit that subscribe button and the notification bell so you don't miss out. Also, don't forget to join our Discord community linked in the description for even more insights and discussions. Thanks for watching, and I'll see you in the next one.